Welcome to my YouTube channel. My name is Augustine Akonde, and I hope to bring your way educative contents in investing and finance and accounting going forward. So this will be my debut content. I hope you do like it, share and follow if you find it interesting. So today we're going to be talking about starting your investing journey. How do you start your investing journey? To build wealth in a sustainable way, your 9 to 5 isn't enough. And so you need to take your investing very seriously. And so today, I am going to show you the different things that you can invest your money in. I'm going to teach you the difference between savings and investments. And I'm going to tell you a little bit more about the 3 asset classes that you broadly can put your money in so that your money will work for you. So to start, what is the difference between saving and investments? When you earn your salary or revenue or income from your business, you either spend it or you save it. That portion that you save is basically what we call savings. Now, savings often can be in maybe moderate guaranteed income accounts like savings accounts, which typically would give you, if you are in advanced economy like in Europe, Canada, and the US, maybe 2%, 3%, or it can even be on in your checking account. That is savings. That is not investing. Now, the next thing you need to do after you have saved is to invest. And so, what are the different kinds of investment opportunity that you can find? Broadly speaking, there are 3 types of investment opportunities that exist out there. And this is without recourse to the market or the geography that you live in. Whether you live in the US or you live in Canada or you live in the UK or even anywhere in developing countries such as countries in Africa or Asia, there are broadly 3 kinds of investment instruments or investment vehicles that you can put your money in. The first one is what I would call equities. The second is what I would call fixed income instruments. And the third is alternative asset classes or alternative investment opportunities. And starting with the first one, equities. What exactly are equities? When you invest your money in equities, you are becoming a part owner of an existing business. And I will not go complex into this topic, at least in this first video. But basically, equity investment is an investment to co-own an existing company. And that company might be listed or unlisted. Those typical investments that are unlisted are where your typical VC funds and private equity investments and angel investors play in. But today, I will only be focusing on investing in equities in listed markets. And what are listed markets? Listed markets are organized capital markets, such as the Nigerian Stock Exchange, the London Stock Exchange, the New York Stock Exchange, the Toronto Stock Exchange, or even the Japanese Stock Exchange. Most developed and developing economies have organized capital markets where players can come in to raise funds and where investments can put their savings, where investors can put their savings to work. These investors can be individual investors like you and I, or they can be corporate investors like companies, pension funds, banks, investment management firms, etc. There are other kinds of equities like private equity, which I'm not going to go into. Now, And there are even more about stock market investing or equity investing that I will not be able to cover in this video. I will implore you to continue to follow this channel and watch out for my upcoming videos where I will be talking a little bit more about the different nuances and the things to look out for in equity investing. I will go to the next asset class, which is fixed income investing. Fixed income, as the name implies, is basically a type of investment where theoretically your invested capital is guaranteed or saved. So technically, in a fixed income investment, you ideally, theoretically, should not lose your invested capital. And I'll say you should not, and not that you cannot. Again, there are certain things that can happen that all kinds of investments potentially can be lost, whether they be equities or fixed income. But for this video, just understand that fixed income investments are typically theoretically safer investment compared to equities or even alternative asset classes, and you should not theoretically lose your invested capital. And so typically, fixed income investment will pay you a fixed rate of return, which we call coupon, right? 10%, 15%, 20%, 25%, depending on the country you are making the investment and what the inflation atmosphere is in that particular country. Typically, in advanced economy, fixed income investments are called by different names, such as treasuries, commercial paper, certificate of deposit, fixed deposit, or even guaranteed income certificates or GICs. And so what you should know is that the coupon on a fixed income investment will typically reflect the inflation environment in such a country. For instance, if you're investing in Nigeria, you can expect the coupon to be somewhere between 20 to 25% or even 30%. But if you're investing in fixed income instruments in developed countries such as Canada, the US, or Japan, the coupon rate can be as low as 2% or maybe as high as 11-12%. The third category of investments is what I will call alternative asset classes. These include real estate investments, Bitcoin, stablecoin, and other kind of alternative asset classes. And so today, so that I don't bombard you with a lot, I'm going to stop this video here. And I hope you find it instructive. I hope you find it useful. Let me know in the comments which of these asset classes have you put your money in. This will be the end of my video for this week. I hope you like it and I hope you share it if you find it interesting, so that whenever I do the next video, you can be alerted and get the privilege to join in. Thank you.